Welcome to the Cattle Talk Podcast, your weekly breakdown of cattle market fundamentals, key news, and the insights shaping the industry. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
Today is February 20th. I've got Jeff with us here today. We're going to talk about the cattle market. How's it going, Jeff?
Thanks for having me around again, Michael.
Awesome. Well, we've got some fun things to talk about. We're going to talk about the tariff news a little bit today since that's new and fresh, and it seemed to move things around a little bit for both the soybeans and the cattle market. We're going to talk about the cattle on feed today, and then we're going to talk about some poor packer margins and a little bit of our harvest speed. So where do you want to start, Jeffrey?
All good topics. I think let's just review the market here on the week, because I think there's a few lessons to be learned just on this week's futures trading activity, Mike.
Hey, pull up a chart.
So really, actually a very calm week. You're actually starting to see some of the volatility indicators go down a little bit here in the past couple of weeks, because it has been some of the calmest weeks that we've seen. We've got, go ahead and scrunch that thing in a little bit, Cade, there, but last Friday, you had a pretty nice uptick based on some quite a bit higher cash, right? That's when we traded some of the 249 stuff down south, 245-ish up in the north here in Nebraska. And then what we've got going on this week is really quite a flat market. And today's cash, if we can hit on that quick, going to be a little bit higher than last week. Also, I think the South is still trying to break loose a little bit. North did a lot of 247 instead of 245 type of money. So another big jump higher in the cash market, and we are ending the day lower, Mike. And I think there's a little bit of uncertainty around just a few items there. The Greeley strike situation, to our knowledge, I've not seen any sort of announcement on that today. They're supposed to be having that discussion today, as whether the union's going to strike in Greeley, Colorado. But I think that ended up putting a little bit of pressure on the market, even though nearby fundamentals here from a cash standpoint were really excellent and that probably started breaking loose, I would say, afternoon. So fairly late in the day, I guess, is my argument, and the futures kind of got a little bit weaker during that same time frame. So the Greeley thing's out there yet. Watch for news here, later today throughout the weekend on that topic. And then the tariff discussion, Mike, why don't you give us some insight on that here? 'Cause I think that was probably throwing a little bit of negativity at this beef market also.
I'll have Cade pull up kind of the headline just with what it shows happened here. But basically, the Supreme Court axed tariffs, Jeff, today. They shut down Trump's tariffs. So Trump responded with new global tariff rate. So if you look at it, he pretty much had to salvage the signature tariffs after the Supreme Court struck down his global duties, pledging he would basically use just different tools to work around the ruling and preserve the important taxes he has cast as essential to his economic and foreign policy, because this is what he's been running on, right? It's all tariffs. So when it comes down to it, he was really angry. We watched his press conference. He said it was just dumb. It was just stupid that he can destroy a country, in his own words, or put embargoes on him, which that was my worry about this whole thing. It's like, that's why I feel like the markets reacted in such a negative way after this happened, because, well, if he can't do tariffs, what's the more extreme thing he's going to do, Jeff? Because in Trump's psychology...
You don't think he'll just roll over and play dead?
No, that is not Donald Trump. He's going to take it as a win, and he's going to say, well, this just means I can bomb the country, or I can put an embargo on them and say you can't do business with them at all. And he even talked about this during his press conference just like that. He said, I can destroy that country and blow them to kingdom come, but I can't do a little tiny tariff on them. It's just dumb. So
Sure.
The way he talked, I'm surprised when he talked, we were watching the markets and they didn't bounce around even crazier when he was talking, especially in the language he used. But basically, no major changes. He said that the Supreme Court did not overrule tariffs. They just merely overruled a particular use of the tariffs in the IEPA is what he suggested. So referencing this, Right now, he's going to go in a different direction. He's going to accomplish the same thing he was doing, just in a different way that takes more work. And that's basically what he said. He's like, I was told I should have did it this way the first time, but it was more work, so we're going to do it this way till the Supreme Court told us we couldn't. I'm going to still accomplish the same thing. Afterwards, so if you get past the whole like section 122 that you can look into from the Trade Act of 1974, or the section 302, I believe, and 301 and 232, basically you get beyond all of that, Jeff. And what we did see was Trump is basically putting a 10% global tariff on everybody. Now, the direction of where this can raise or lower tariffs for the entire world is yet to be known a little bit. It could raise it up to like 16.5% from 13.6 that we're at, or it could lower global tariffs to 11.4% if some of the exemptions are still going to remain. So it's uncertain, but the markets don't like uncertainty. So that's why we sold off pretty hard for a while in soybeans and the meat markets, especially for meat. So this is Cattle Podcast, so we'll wrap it back to that. The thing is, if those tariffs went away, Brazil is all of a sudden sitting in a pretty good spot to export a bunch of beef back to the United States again without having that extra 10% tariff on or whatever. So for a while there, through most of the trading session, cattle sold off pretty hard at 9 o'clock when that news came out Central Time. Soybeans sold off pretty well. We saw a few different things come out on all of that. So what's your take through the day, the massive news with the tariffs and kind of market reaction so far? I have a feeling this is far from over.
Yeah, that would be my guess too. I don't need to repeat what you said, but no doubt I was impressed that the markets didn't have a lot more volatility around them. So I think it's because it's maybe just a lot of what happens next is what's going to be what kind of drives the direction here. So could we end up with some fewer tariffs on the Brazilian beef? I think you have to recognize that as a real possibility here. I don't think they'll go down to 0 or even 10%. We've had tariffs on Brazil for decades as far as the beef coming in here. So I'm assuming all of those won't go away. They are currently, it's probably just wrapping up. They would have their quota, South American quota. Brazil shares it with a few other countries, but not Argentina. Argentina, for interesting observation there. But so I'm sure that is now full. They usually get that filled up in January, first half of February. So this year, I'm guessing they were more aggressive than what they have been. So far, that's what you're going to see. As more information comes out here in the coming weeks about what are we importing from Brazil specifically, I'm sure you'll see some really big numbers because of that quota. Going forward here, it'll be interesting to see what the tariffs end up being here in the weeks to come. That would be the big one, right? We've talked about that a few times before. Whatever we're doing with Argentina, probably not enough supply there to really move the needle in a big way, or that in itself fix our shortage of beef is probably a better way to say it. Brazil could have the potential greater potential to get that job done. I'm not suggesting that would be the end all to the cattle market or anything like that, because right now, Mike, it is all about the supply side of market-ready cattle.
For sure. I know, to quote our very own president here from today after these things all came out, he said, foreign countries have been ripping off the U.S. for years, and they are ecstatic. They're so happy they're dancing in the streets, but they won't be dancing for long, Trump said. That doesn't sound incredibly bullish on soybeans, for example. We'll see on some of the other things, but Trump has a way with words, Jeff.
Absolutely.
What else can you tell us about, you mentioned the supply side here, pretty low kill lately. What can you say about our harvest rate?
Yeah, we're looking at a 516 kill. I know we've been talking about this for a number of weeks, but it is the news. I mean, it is absolutely incredible. Cade's got the chart up on the screen there. So latest data point there is going to be last week at 540. Take that back down to a little bit lower than that lowest mark there. Is what we're sitting at. So under 520, that's going to be competitive with what we used to kill on a 4-day holiday week, right? So
now it's the norm.
Yeah, it's really incredible.
And they're not incentivized to kill anymore, are they?
Well, Packer margins, that's why I wanted to talk about it again on this podcast. I know we hit it on last week, but they are record low here. The data set we looked at today goes back 15 years. Cade's got that on the screen now. Just incredible. Whether that's the perfect number or not, we can argue about that, as far as the $400, but
this is supposed to include everything, right?
right.
That we're
Everybody's got
using.
their, the Packer margin thing, and maybe this is a good time to talk about this. If the way we look at it, we wouldn't say, is it really important that it's a negative $400 or if it's a negative $365? I would strongly argue no. And the reason for that is everybody's got their own cost structure. On variable cost, even before you start to contribute anything to the fixed item, and then go into that discussion. Well, everybody's got a huge spread as far as their fixed, depreciation and or principal and interest, right?
Yeah.
But just so we look at all this stuff as on the relative factor. So it's $400 today. It was $200 2 weeks ago. That to me is what matters. And those are negative
This
numbers,
is as
obviously.
bad as it's got during this stretch, hasn't it?
It's as bad as it's gotten, I think maybe forever. But so that's severely negative margins. We are deeply concerned that Packers will want to do something about that, Mike. It's just got to be getting to the point where we are going to start throwing some straws on here that breaks the camel's back type of a thing. So we're going to be watching that information, that news storyline very closely in the coming weeks, even I dare say, as far as another packing plant shutting down, something taking place here that changes the leverage a bit or has the potential to change it even later in the year. Maybe there's nothing they can do today. If you have a 515 kill this week, and cash is still higher week over week, that suggests that there's just nothing that can be done from the Packer margin standpoint today. But there will be, from a seasonal standpoint, more cattle coming in here as we get into later spring and into the summer and certainly into the fall. So announcement today maybe doesn't even change the cash price tomorrow or next week, but the futures will still react as they try to consider what's going to happen in June, what's going to happen next August.
So that's the thing, because people keep asking, like, what can break the cattle market lower? And whether it's truly bearish or not, because we're so far below capacity, you could probably shut down a plant today and still be fine.
For sure you could.
But the futures, they may just say, that doesn't matter, I'm going to trade lower in a big way, fast way, and then
that would be my opinion, Mike, and that's a debatable conversation.
Yes.
You're going to find plenty of people out there that are going to suggest, hey, that won't even get the job done. And okay, I get it. You might be right.
But it doesn't have to make sense for the futures.
For sure not. For sure not. And then, is there a camp? I know there's a camp because we would be in it, that the border gets open in the next 12 months, right? So if those two happened, if you had a plant go down plus the border open, certainly that would take the cattle market down.
Yep.
I don't think you'd find too many people that would disagree with me on that. So that all gets priced in, right, in these type of events. So
these both seem like scenarios that are likely to occur within a year rather than a potential to happen over the next 5 years, so to say. So when you talk about this cattle cycle, those are pretty short term in the grand scheme of things, I'd probably argue.
That is spot on. That's exactly be my message today. I would dare say that both of those are a win and not if.
Yep.
Certainly the border opening, that's the way to think about that one. Win and not if. Plant closure, maybe you could, I don't have any insight.
Well, you
there.
stay down here long enough, it's going to be.
Seems like the math ain't mathing.
Yep. All right. Any other final thoughts before we wrap up this weekend?
Cattle on feed. We better hit on that here real quickly. I don't think it's going to be a big driver, but did come out this afternoon at 2:00. Same story here, Mike. I don't know that we're getting a lot of new information. There was one less day as far as business or slaughter goes in the month of this year versus last year. But yeah, about 2% lower on feed, 5% lower placements. Compared to the trade estimates there.
That's about as close as you get that estimate
Yeah.
on placements there. That as
really
long as
is.
you keep that within a couple percent, that's normally about as good as it gets.
So I don't think there's new news here. Those numbers have looked very similar for a long time here. And that's okay. Still indicating a few less on the supply side, that's for sure.
All right. Well, thank you for your time today, Jeff. Thank you for everybody tuning in. It's been a fun ride here already for the last few cattle podcasts. Please hit the subscribe button, and we'll see you next week.
Thank you.